In this video, we're going to discuss the importance of accounting information. So accounting information is really critical to whoever is making decisions, whoever the decision makers are within an organization. So that could be individual employees, it could be management, it could be the board of directors, it could be shareholders, the owners of the business who are deciding whether or not to continue to invest or to get out of the business or maybe to sell it to somebody else. It could be banks who are thinking about lending money to this business, assessing their creditworthiness. It could be the government who's making sure they're getting their fair share of taxes. So accounting information is used in the decision-making process for various facets of what you're going to experience. Here in this video are some key reasons why accounting information is so important. Let's start with financial planning. Accounting information provides insight into the financial health of an organization. It allows individuals and businesses to make informed decisions about budgeting, investing, and long-term financial planning. It also helps with control and performance evaluation. You want to make sure that your employees are doing their job properly, that they're making you some money. You want to make sure that managers have the best interests of the owners in mind. Accounting information helps the managers to evaluate the performance of a business against their financial goals and their objectives. So let's say I tell you that I want the third quarter of 2023, I want sales to increase by 2%. It's an easy goal to set. How do you measure it? How do you find out? You look at what's called the income statement. You look at, third quarter versus the second quarter. You run those two income statements and you compare the two. Did you have a 2% increase or did you not? That's accounting information, and it's used to create better decisions in the future. Was that a good goal? Did we achieve it? Was it too high? Did we actually have a decrease in sales? It tells us a story. It can help you to identify areas where you have a weakness and make necessary changes. It can also help you identify areas where you have a strength and where things are going really well and you need to continue to invest in that. Accounting information also helps with compliance, right? Helping to ensure compliance with laws and regulations. And there's a lot of them, right? When you're talking about the banking industry or the accounting industry or anything with finance, there are lots and lots of regulations. The US Senate and Congress, they really like to get into the weeds with this stuff. And it's important because their role is to protect investors. Like that's what the Securities Exchange Commission does. That's what the Sarbanes-Oxley Act was designed to do. And there's tons and tons of laws and regulations that we could talk about. But just to understand that we really do have to keep that in mind and we have to be compliant. Otherwise, the IRS or whomever is going to levy penalties, and that can get expensive real fast. So accounting information helps provide a record of financial transactions that can then be used to demonstrate compliance with these tax laws, regulatory requirements, and those contractual obligations that you may have. Okay? Accounting information can also be used by investors, right? Shareholders, or just the general public. I have some money invested into Microsoft, and I'm a big fan of everything Microsoft does as far as their product offering. And so anytime I use Excel or anytime I use Teams, I'm like, yeah, good job, Microsoft. I'm an investor, so anytime they do well, so do I. They're a publicly traded company, so their accounting financials are available to me as an investor to look at and analyze and make decisions on whether or not I want to buy more of that stock or sell some of my stock, or at what price I would think would be appropriate for either of those things. So that information is really critical for making informed investment decisions and to understanding from an investment standpoint, what are the potential risks and the potential rewards of that investment. Now, accounting information can also be used to communicate with your stakeholders. Right? Stakeholders can be lots of different people, right? When I say stakeholder, it's not the same as a shareholder. A shareholder is just one type of stakeholder. Stakeholders could be creditors, it could be the customers, it could be employees, it could just be the community at large. Imagine if Marshall University decided to shut down. What would that do to the overall community of Huntington and even further than Huntington? Even though a lot of people don't work for Marshall or are not students, it would still affect a lot of people. And that's the same for any business. We want to make sure that businesses are healthy, that they're doing what they're supposed to be doing, that they're making a relatively decent profit, especially the larger they are, right? And so that's important. It's important to be able to communicate everything's fine, everything's good to the community, to your stakeholders, to your shareholders, to your employees, to your creditors, right? Everybody wants to know things are smooth, things are good, you're making money, or if you're not making money, you've got a plan to fix it. And so you do that by sharing your accounting information, or at least using your accounting information to then tell the story of what's going on so that you can help to just build trust and credibility with these groups and maintain those positive relationships. So just in summary, accounting information is really essential to just making informed decisions about the financial health of an organization. It helps managers to evaluate performance, helps to ensure compliance with laws and regulations, and it provides valuable information to investors and stakeholders. Okay. One thing that I'm going to leave you with in this video is a quote from Jerry Doyle himself. And if you don't know who Jerry is, he's the chair of the business department, and he has taught accounting for Mount West for decades. And I will always remember this. I'm going to leave you with this. The purpose of accounting is to provide useful information to decision makers. That is what we're here to do. That is the entire purpose of this class, and the purpose of accounting itself is to provide useful information to decision makers so that they can make the most informed decision possible, the best possible decision. That's what we do as accountants, okay? So I'm going to leave you with that, and I will see you in the next video.